Thanks a lot, Anton, for these very useful insights that yet trigger a lot of new questions. So I think it's time now for the audience to speak and to raise questions for Anton so that we can learn even more about the business of doing good. My colleagues will come around with the microphone. Please say your name and the organization you're working with.
Hello, my name is Piet Callens. I work for Hefboom, and we are giving microloans to people in Belgium who are not in the possibility to get financing from the regular banks. I'm wondering, in the business model you are describing or telling about, you succeed in getting a return on investment of 15 to 18%. Then I'm wondering, how much do people pay on their loans? So the people you give loans to, the interest rate, how much is it to get such a return on investment? Is it still doing good business of doing good, the interest rate, or maybe there are other revenue sources? So that's my question.
Shall we take maybe 3 questions and answer them together?
Yeah, my name is André Saviman. I'm professor at the Catholic University of Louvain. Thank you very much for your presentation. Very, very nice. I have just 2 small questions. I understand your experience regarding the efficiency of the organization, but challenges for microfinance institutions are very numerous. So how do you see the role of regulation and the funding on the efficiency of microfinance institutions? This is my first question. The second question is, so the experience you are explaining is very, very interesting, but how do you see the sustainability of such model? I mean, microfinance institutions need to challenge, as you said, the social and the commercial goals. But to be sustainable, microfinance needs to have enough return. So what is the limit for you? How do you see the sustainability in the future regarding such model? Thank you.
So the first question about interest rates, I have to say the actual interest rate of AMK has completely slipped my mind, but it is a commercial interest rate. It's in the range, I think it's in the range of about 28–30%, something like that, but somebody can correct me. But no, AMK doesn't have other revenue sources. The business model for AMK is that the interest from its loans covers its costs. Plus, it's now going into the transfer business and the microinsurance business. So, but all of these activities are commercial activities. So very much the business model is a commercial business model. The point, I think, is that I'm making in the book is around how do we use that commercial model to generate social value for the clients. It's very easy to lend to people and to make money. That's, I think it's the second oldest business in the world. So the technology around financial services and how we make money from that is not challenging. The challenge is this connection with recognizing people's needs for financial services. Where does the value come for people? The need for investment, the need for coping with emergencies, the need for managing your day-to-day financial activities, for life cycle activities, so that you are able to smooth your income and expenditure. So it's just one very quick aside. There's very interesting research that came out of one microfinance organization that tracked the poverty level of its clients over time. And after 5 years, it saw that on average there was no change in poverty. And they were really disappointed about that. It's like, okay, we're trying to reduce poverty, we've been working with these people for 5 years, and there's no change. They then went back to the data, and they asked people, what's been happening in your lives in the last 5 years? And actually, what had been happening in the Philippines, typhoons, health emergencies, floods, fires, every family had experienced multiple major catastrophes over that 5-year period. And when you went back to that and said, how is it possible that after 5 years of all these problems, you are still in the same position as you were in the past? That whole perspective changed. And then they could then make that link and say, well, actually, it's those financial services that have given people the means to cope with those problems, to make investments when they're able to make investments, to have insurance when there's catastrophe, to have savings to fall back on. So really, yes, the question of interest rates is important, but the challenge is really how do we provide the service in a commercial way which is actually going to be beneficial. The second question really around the sustainability and the regulation. I think in Cambodia, regulation has been a really important part of this. I think the regulation to allow funders to come in, investors to come into the country, the regulation around the credit bureau and managing the competitiveness of the market. So obviously, microfinance organizations have to exist within that wider environment. I think the example of the credit line is a really good example of that sort of the need to match the funding and the environment to the organization. So we're always talking about customer focus in microfinance organizations, understanding your customers, having the right products and services. But often investors are not really understanding their customers and not really tailoring their products to the cash flows of the organizations, the microfinance organizations they're investing in. So if we look at the credit line product, what was unique about this product is that it gives flexibility to clients. And the risk to that product was not being able to predict the cash flows of clients. So is everybody going to draw down the loan at the same time? Is everybody going to repay at the same time? Is everybody not going to repay at the same time? So how are we going to manage the liquidity of the organization? What's actually happened over time is AMK has built up a picture of people's lives. And actually that liquidity, the cash flow of the clients is actually very predictable. And AMK is able to manage that very clearly now. But without the funding from Concern Worldwide, the charity that set up AMK, which gave 3, 4, 5 years secure funding at the beginning, there's absolutely no way AMK would ever have been able to develop that credit line. Because what most investors require is regular on-time payments from the MFIs, in the same way that most MFIs require regular on-time payments from their clients. So we really need to look at this bigger picture and actually understand. It's all about understanding your customer, but it's all about understanding the cash flow and really saying, how do we build in that flexibility? How do we build these products that are really matching the needs in a way that we can still manage this as a business? Because obviously, if you take risks which are too large, then the business is going to fail.
Thank you very much. My name is Antony Koning. I work for CGAP, and congratulations, Anton, to a good introduction for us and attempting to read the book further. I have 2 quick questions. One, I was intrigued to hear you say that AMK views its customers have changed. And in particular, you mentioned that they've become more empowered and that they're now more demanding. I think when people hear you speak about customers have changed, they might even think about, they've gone up market or something. But so it would be interesting to get a bit more sense of what you mean with the change that customers have gone through, and particularly related to that level of empowerment that you highlighted. My second quick question is, when I'm listening to this model, I think it's an organization that has a very labor-intensive approach, especially the home visits that you highlighted so much are critical to their methodology and their approach. I wonder how this high-touch approach is going to be combined or already combined in the organization with some of the digital solutions or lower touch that have entered in our space, and many organizations see as opportunities to even increase reach, reduce cost, etc. So I'm wondering how MK looks at that in this whole business model perspective that you highlighted. Thank you.
Hello, my name is Johan Elsen, Director of Oikocredit Belgium. Last year I was happy to learn in Bolivia that in the past 10 years international studies, amongst them of the international bank sector, showed that in about 10 years' time, about 1 million people in Bolivia could escape from poverty and move up into lower middle class. And it showed also, several studies, that the microfinance sector in Bolivia played a very positive, had a positive impact on that. Last year I also had the chance to visit AMK in Cambodia, and I could see with my own eyes the positive effect it had on some individual clients of AMK in the field visits, but I did not find clear evidence or studies or figures about the national impact or the positive or whatever impact the microfinance sector in Cambodia had. So I have two questions. Are there studies showing what the impact is, in what way people are empowered and can escape poverty? And don't you think some more work needs to be done in the development of impact measurements, impact studies worldwide of microfinance on development work?
Okay. So let me answer those two questions. I think the question on customers changing and the low touch, high touch model are both fascinating questions. I heard a lot when I was in Cambodia about that change in customers. And I think a lot of it has come through competition. So AMK really has struggled with this home visit because it adds time, it adds complexity to the process, and customers don't want that. So, but AMK has this idea, somebody said to me, we will never be the leader in customer service. And what he meant was not that we're going to give bad service to the customers, but that it's not just about always following what people are asking for. That if people are asking for bigger loans and faster service, if that's going to undermine your ability to do a good job, that's not what AMK is going to do. So, I mean, when I talked to some of the client officers, they said the customer is king. There's a real sense that people are choosing or moving around, have a knowledge. They've had years of experience now with microfinance. They've built up that understanding and knowledge of the organizations, and they're able to make some choices between the organizations. But what I find interesting is actually talking to the clients. Well, the ones I talk to, obviously they're AMK customers, so they would say they like AMK, but looking at things like the exit rates from AMK compared to other organizations, AMK still has a very loyal customer base. And partly that may be because obviously they were there first, so obviously my family's from South Africa, and I've been following discussions around the ANC and why are people still voting for the ANC even though they don't like what they're doing. But it's that sense of loyalty. But there's also the sense, I think that the relationship is also incredibly important. And it's not just the relationship with a person, but it's a relationship with the organization and a sense of trust and a sense of understanding that that organization is doing what's right for you. So I think AMK clients are willing often to take slightly slower service because they actually recognize some of the value in what's happening. The high touch, low touch thing I think is really critical. I would say AMK obviously is moving much more to become a mixed organization. So they have, in the last few years, set up a network of agents in the villages who are using mobile technology for savings and remittances. What's interesting about this actually is AMK is the only organization in Cambodia doing this, because their entry point into savings was the customer, and how do we better serve customer needs. Everybody else's entry point into savings was post-financial crisis, where suddenly they got a shock, where the OICA credits and Incofins of this world, and Keert, I need to ask for your comment at some stage. But suddenly the investors started pulling back from Cambodia because suddenly Cambodia was risky. There were worries about over-indebtedness, and suddenly the capital that had been flowing into the country wasn't available. So everybody else has gone into savings, saying, how do we mobilize savings from the people with money in Cambodia? And as an alternative to capital. AMK has gone into this in two ways, partly to mobilize capital, but also really to address client needs. So I think it's a really tricky question, because on one side you have the relationships, on one side you have the need for really understanding clients, particularly around lending. On the other hand, you have that sort of the possibilities of low-touch digital ways of accessing services. And I think AMK is treading this line between the two and really trying to get the value it can from the low-touch digital, but also connect it into the high touch. The other really interesting thing about AMK is, as a customer, it doesn't matter which channel you use. So very often you have sort of poorer rural clients who only have one sort of the mobile agent channel and then a higher level of service in the branches. For an AMK client, you can go to any branch, you can go to any agent. There's no distinction. The product actually is the same. You can just use different channels. The question on impact studies. Let me just start with a cautionary tale on Bolivia. Not that I'm an expert on Bolivia at all. I was talking to a veteran of microfinance in Bolivia she's Bolivian, she set up a microfinance organization, she's been there her whole life. She said to me, we came into microfinance because we wanted to give people an alternative to the moneylenders. And for a number of years, things were great. We stopped seeing the moneylenders. But now, today in Bolivia, there's more moneylenders than there ever were in the past. So, impact in microfinance is incredibly complicated. I like to make the analogy with trying to do an impact assessment of health. If I said to you, what's the impact of health services? You would say you're completely mad. How can you do an impact assessment of health services? Do you mean hospitals? Do you mean heart transplants? Do you mean primary health care? Do you mean vaccination programs? And which vaccination program? And which? I mean, it's the details that matter. And I hope that from my presentation and the sort of insight into what does it take to make a microfinance organization work, you can see that there's a lot of really important details in how you design and how you manage and how you build that business model that make all the difference to how a microfinance organization creates value for its clients. So if you go into an impact assessment trying to say, what is the impact of microfinance? We've had microfinance in this country for 20 years. Is there evidence to show that microfinance is reducing poverty? You will always get the same answer, which is always yes and no. That in some case, there's some evidence that it's positive, there's some evidence that it's negative. On average, it's maybe neutral, but because to really understand impact of microfinance, you need to put as much effort into understanding the inputs. You need to understand the quality of what's happening. Are these home visits happening or not? if AMK says the home visit is essential, what is the impact for a client where the home visit was done compared to what is the impact where the home visit was not done? Do we know whether the home visit's being done? So you have to be asking those questions to do your impact assessment properly. So I would certainly value good impact assessment, but for me, good impact assessment needs to put as much effort into understanding the organization and what it's doing as trying to understand the results, because otherwise we're never really going to get the answers that we need.
Okay, we just have room for a last round of questions.
My name is Bioton Bangboye. I work with Minds Crossing. I've worked personally with microfinance for a long time in West Africa. I'm really interested to hear the stories of AMK and how client focus is affecting design of products. I'm curious about how this mentality has affected access to savings. The clients have savings, and in my experience, that savings is used as a risk stopgap. There's never any access in the life cycle of a loan to client savings, even if it's needed. So instead of giving access to savings, you give another loan. Is there any way that AMK has been able to address this? The second thing is my concern still with interest rates. In my experience, it's always a flat interest rate policy with most MFIs in the South, which in effect doubles the real interest rate. So if it's 28% and it's a flat rate, and it's an installmental repayment policy, then you have eventually about 56 to 72% real interest rate. What's the AMK's policy on interest rates? Yeah. Thank you.
Who has another burning question?
Michel van der Voir, Meso Impact Finance, doing investment in the Philippines. I would like to know who are the funders of AMK, profit or not-profit organization or both? And what range of interest rate do they require for the funding?
Okay, another set of great questions. Let me start with interest rates. So AMK, as far as I know, has always charged declining balance interest rates. So AMK was, before the whole sort of movement in client protection and the client protection principles started in microfinance, AMK right at the beginning had its own set of client protection principles. So, and one of those was transparency to clients and making sure interest rates were charged in a fair way. Coming back to the regulation question, that as a market in Cambodia, interest has to be charged on the declining balance in Cambodia. So there's very clear policy, client protection policies which are part of the regulation of microfinance in Cambodia. Savings, I didn't have time to really sort of talk about savings very much. And it was one of the areas where I sort of debated about whether to get into it, but I was hoping a question on savings would come up. AMK really, from its understanding of the client needs, AMK right from the beginning wanted to provide savings. As you say, to help people manage the risks, to use savings for managing their financial needs. It was a really difficult journey for AMK. They tried it at the beginning. They had savings that people didn't use. The regulatory environment wasn't right. But in 2009, there was a new regulation that allowed for deposit-taking microfinance organizations. And since then, AMK has set up savings. But as you say, it's a real challenge to make it work. There's no compulsory savings in AMK. People can access the savings when they want for whatever purpose. But building that trust from the clients has been a real challenge. There's been some bad experiences in Cambodia of a bank that went bust with everybody's savings, and people have got sort of fear of savings. But it was also about how do you get savings out to people, and that's where this agent banking approach has come out. Every time I do this presentation, the numbers have changed dramatically. I think I said 1,200. I got an email this week that said it's now 1,600. So AMK is really putting out this network of agents throughout the country, which is building in the remittances and savings. And those are essentially stall holders in the villages who have some liquidity, and a client can go to them at any time during their opening hours, and actually a lot of the time they can go outside of the opening hours and knock on their door and say, I need some money. And that allows them to deposit or access the savings when they need it at any agent in the country. It also allows them to transfer money. So family members can send money to each other throughout the country. So one person can save and then transfer it if there's an emergency. So that's only been going for a couple of years now, so it's in very early days, and there are a lot of barriers to overcome in terms of building that understanding and trust in those services. And AMK, I think one of its lessons was the transfer services was an easier way in, because particularly with the garment factories in Phnom Penh, there's a lot of connection between family members working one place and needing to send money to other places. So they're building that usage and understanding of that service through the remittances, and then there's an opportunity to start sort of building the savings on top of that. Funders. I wanted to give Kurt from Incofin just a moment to say something about Incofin's decision to invest in AMK. AMK now has a mix of investors, mostly social investors and one commercial investor who I'm not sure if they're actually on board now, but do you want to just say a few words?
Yes. Good afternoon. My name is Geert Petermans. I work for Incofin Investment Management, and we are an impact investment fund manager, mostly making investments in microfinance and financial inclusion. And AMK is one of our most important partners. Last year we also had a small seminar here in Brussels with the management of AMK. We are currently one of its largest shareholders since 2013. And indeed, Anton, I think you made an eloquent description of how AMK has developed over a period of just 10, 12 years, really a very innovative business model, and ingrained in it its DNA of being socially oriented, focused on its clients, as well as looking for a very sustainable operation. And that sustainability aspect in itself generated a lot of interest from investors. Many investors were knocking on the doors of AMK. But remember, and you mentioned it, it originated from the initiative of an NGO. And that NGO, at a certain moment in time, I think as well as 3-4 years ago, because of the strong growth of AMK, realized that it could not continue to support AMK forever and decided to divest. AMK as a regulated institution has a share capital, and the share capital would be transferred to new investors. And this was of a tremendous concern to AMK staff as an institution, because this was first of all something that was perceived very threatening by them. New investors means new people having influence on the organization. And their main concern was, will this change our philosophy? So you asked me to highlight a bit why did AMK eventually end up with Incofin as being a partner? Well, one of the main aspects to this in our discussion was, first of all, they wanted to have an investor that they had worked with in the past. So we had been lending to AMK. So we knew their business. They also knew ourselves, our funds, our people. And they wanted to have an investor that would demonstrate that when it came into the shareholding, it would not significantly bring change to the organization, but would respect its philosophy. Of course, as the context changes and as there are new shareholders, gradually things change, but with mutual respect for the organization and the interests of its investors. And second of all, they wanted also to have some guidance in the future process of involving new shareholders as well. Concern was originally the 100% shareholder of AMK, wanted to divest very significantly, only maintaining 10% at the end of its divestment stage. So that meant that, as I just indicated, we acquired 25%. AMK is a large institution. For us, this was already a large investment. Other investors also needed to be sought. And AMK wanted to have the assurance and to have a soundboard for making an opinion who were the right kind of investors to attract over time. So we invested in 2013 as the first external investor to come on board with AMK. We have been showing our support for their business model in various ways. We have put people on the board. We actually have an office a small office with 2 people in Phnom Penh, so it's easy for us also to be actively involved in the board decision making and the presence, knowing the operations. Second of all, we have assisted them with further technical assistance to develop more products and strengthen their human resource operations, which would allow indeed for them to make investments which would not immediately generate a return, but stimulate the creative thinking and allowing them to think long term, not seeking a short profit. And this was also one of the things that not just AMK, but also the Central Bank of Cambodia, which is an entity that needs to approve investors that invest into this industry, as it is a regulated industry, valued very much. They want to avoid that investors come into this industry with just a very short-term perspective. And then finally, one of the things that in the meanwhile we achieved was also to bring new investors to the table that would fit that expectation of AMK, and we made jointly with AMK and Concern, the original NGO, a selective process of the type of investor we wanted, and we chose to have a balance of investors that would have a more commercial approach and a more developmental approach. So in the meanwhile, one more commercial investment fund has invested, as well as one development finance institution and a public DFI, as they are known.
Great. Thank you.
Thank you.
So thank you very much, Geertop, and especially, of course, Anton, for this intriguing insight in AMK and the business of doing good. We are running out of time, so we will now give the floor to Patrick Kind to give us his insights and lessons learned out of your presentation. Thanks a lot, Anton.
Thank you, Anton. I've written down some insights that I want to share very briefly with you. Insights that we can relate to as a business in this part of the world. I must say, I for sure will read your book because I had some déjà vu effects when I heard your story about AMK. Although KBC is not a microfinance nor a microinsurance organization, we do have some things in common with AMK. We're a multi-product, multi-channel organization, and we have a very important role to fulfill in society. Moreover, we strive to be the reference in fulfilling that role in society in all our core markets. So that was quite some similarity. I have found that there are quite some parallels to be drawn in banking and insurance in the Western countries and in developing countries. Because Anton, you spoke of organization change, of management change, of kind of old school pre-financial crisis organizations. Well, we've been there and we've seen that. I heard you speak of making assumptions on behalf of our customers or clients, and often making wrong assumptions. Well, we've been there. I heard you speak of banking and insurance as being actually people business, because you heard you talking about closing the reality gap between theory and practice. Well, we couldn't agree more. It is still people business. KBC as well, therefore, has actually engraved in its strategy to put the client customer first, actually for the same reasons. And I know this might sound a bit hollow, because which organization does not pretend to put the client first? Nevertheless, we have started an investment program last year, a very important investment program with only one sole thing or thought in mind, is creating solutions for our customers that really matter. That's the only thing we actually want to achieve. So it was really good to hear that clarity, consistency in understanding and responding to the really needs of our customers, and not only the wants of our customers, is actually the way to build a sustainable and profitable business. Because sustainability, as we all know here in this room, is the condition to fulfill our role in society. So it truly pleases me that businesses in this part of the world can actually take an example from inspiring cases like AMK. I would like to mention to you all that the book of Anton is for sale when you were just leaving the room. And now it is my pleasure. I would like to thank you for your attention. It is my pleasure to invite you to the lunch reception, which is Asian and which has been prepared by a Cambodian colleague of ours. So thank you very much for your comments.